UOB reported the bank's Q1 2023 results on April 27. The next Singapore bank to report results is DBS, and it will happen on May 2. UOB Kay Hian has provided a results preview. What do they have to say about what to expect for DBS Q1 2023 results? I will provide a summary here. Their forecast is for a net profit growth of 36% year-on-year. Quarter-on-quarter, however, profit growth is likely be a very much smaller 4%. The narrative on net interest margin expansion is consistent in that it will continue to moderate. Although it expanded by 64 basis points year-on-year, expectation is that it would only have expanded by 5 basis points quarter-on-quarter. The pace of net interest margin expansion has moderated as cost of deposits has creeped up due to competition for fixed deposits. Loan growth is expected to be muted. DBS has a reputation for cost discipline and efficiency, with cost-to-income ratio expected to slip below 40% in 1Q 2023. This is always a positive and a reason why to like DBS as an investment. With concerns of recessionary pressure around the corner, asset quality could deteriorate, but this remains benign for now. In the event of asset deterioration, there should be little to worry about. This is because DBS has accumulated sufficient overlay for general provisions with $2 billion set aside during the COVID-19 pandemic. Why should investors for income be looking to invest in DBS? A big reason for investing in DBS is its quarterly dividend payout policy. A 42 cents per share dividend per quarter makes DBS a relatively attractive investment for income. It would translate to a dividend yield of 5.6% if we are able to buy the stock at $30 a share. Although stock prices are less important to the long-term investor for income, it could be instructive as to what the market sentiment might be. UOB Kay Hian has a target price of almost $42 a share for DBS. This would price DBS at 1.85 times price to book value. In my opinion, this valuation is pretty rich. Although I am more inclined to go with a lower target price of about $36 a share as opined by analysts at CMB, the rather high price of $42 a share could happen if the market feels exuberant. No matter how unlikely I think it is, I know never to say never. If I remember correctly, the stocks of Singapore banks traded at around 2 times book value during market euphoria in the distant past. I would take that as a guide. If such rich valuation should happen again, it could be a good indicator to trim exposure to Singapore banking stocks. Warren Buffett famously said, "We want to be fearful when others are greedy. We want to be greedy when others are fearful." Easy to understand but not so easy to execute. Still, it shouldn't stop us from trying. In the short term, the weakness is clear as the stock has been trading beneath the daily moving averages. The 50 days moving average has been declining for some time. The 200 days moving average has flat-lined. Although it might seem like a long way to fall, I see strong support for the stock price of DBS at $30 a share. The 200 weeks moving average is still rising, and it is likely to be a strong support, being a long-term moving average. If I were to add to my investment in DBS, $30 is where it would be. So, now, I have an idea of where I might sell some and where I might buy more. It might not come true, but it is important to have an action plan, our own action plan. If AK can do it, so can you.